Where we have seen a bit of a choppiness continue into the markets there. Let's start with rupee first, actually, because that really has been the decliner of the day. You had seen 59.05 of a high in the markets yesterday, which was a 3-week high. But from those levels, we've seen a continuous decline coming in. 0.5% down on your screens, 59.60 is how that one is holding. Before we touch upon commodities, the IDBI bank earnings are out and on your screens. The first quarter PAT numbers at 307 crores versus 427 crores year-on-year basis. So a decline coming in really on from the last year numbers there. That's the only number coming in on your screen. So less than what you saw in the previous year. The stock, of course, reacting has been down from the starting of the day itself. 3.5% down on your screens for IDBI bank. Let's get commodities back on the screen, and the gold and silver prices have regained some ground after the kind of decline that you saw in the markets yesterday after Bernanke testimony saying that there's no preset course in case of the QE and they would really react on to the US economic data as and when that comes on. 1280 is back, so nearly 0.25% of a gain coming in for the gold prices and near 1% up for the silver as well. There has been a rebound in the Indian markets as well, one because of the rupee depreciation and two because the international markets have seen some bit of a gain coming back. The energy space also has seen a 15-month highs coming in and nearly 1% of gains coming in for the Indian MCX prices as well. The base metal prices in the meanwhile continue to be choppy. We have seen a bit of a red tick coming in for the industrial commodities. Let's get in then. Viral Shah, he's head institutional business Geojit Comtrade, and he joins us on a phone line from Mumbai. Viral, hi, welcome. Let's start with the precious metal space first. And the knee-jerk reaction, of course, was on the weaker side as the markets were trying to read into what Bernanke had said. With the kind of turnaround that we have seen, how would you want to trade the gold prices in the intraday market today?
I think, there was a knee-jerk reaction just before the testimony started where you saw a bad number coming in from the US on the economic space and the gold and silver market reacting sharply. But post that, we have seen a steep amount of correction. I think the bounce that you might see in the market today would be attractive for another round of selling. So I think on gold, we would like to play on the short side. We would like to sell at about 26,500 levels with a stop at about 26,700 levels for a target of about 26,200 to 26,000 levels or so. Similar is the case in silver. I think we would look at the bounce to go short in the market again. We would want to be selling silver at about 40,400 to 40,500 levels. Targets would be below 40,000 levels in silver as such.
Viral, how would you look at the silver prices? Because while the turnaround in the Indian markets for gold has been on the stronger side, silver just about 0.25% on the higher side. The international gains are much more than the Indian prices here.
Well, you have seen a disconnect a little bit because we don't see the same amount of rise or decline in silver purely because of the fact that there are local factors also which affect the silver prices as such. But, I think internationally also we would see some resistance coming in at about $21 or in the whereabouts of that. So I think here in India, we made an attempt above 42,000 sometime last week, but we could not sustain the gains that we've made from the rally that we've seen from about 38,000 levels or so. So I think at about 41,000 levels, there is a good amount of resistance in the market, and thus, any higher levels could be used as an opportunity to sell for an intraday basis.
Viral, how would you look at the energy space as well? Because while the international markets are trading very, very flat, we have seen some kind of a gain continue in case of the Indian markets. Could be because of the rupee depreciation. But how would you look at the international markets to start with? Because we have seen a very strong run-up coming into the sector.
Well, part of the run-up is on the fact that there are a lot of geopolitical tensions in the Gulf, which is impacting or likely to impact the production of crude oil. So that has really factored into the prices. The elevated levels that we see in India is also because of the strong gains made by the dollar versus the rupee. And I think today's gains are also more or less in tandem with the decline in the rupee as such. But if you look at the technical pattern that is developing in the market, we would see that we might retest the previous highs of 6440 levels, but this is for the August contract. So, I think we would be looking at buying at about 6020 levels or so for a potential target of 6440, which is a previous high for the market, and post that even at 6480 levels or so. So we are looking to buy at any dips in this market right now.
How would you look at the natural gas prices? Because that has seen some support continuing as well. While we have seen that 215 to 225 kind of a range hold on, but how would you want to trade on that space today?
Well, it is basically a zone whereby the market can move up and down by about 3-4 rupees. It's a very volatile commodity, especially closer to the inventory levels also. Thus, it's basically in a no-trade zone. But if you were to trade today, then we would like to go short, sell at about levels of 218 for a potential target of 215 or below that, 212 levels or so.
Viral, how would you look at the base metal space? On one side, it's the weakness coming in from China, while the statements are bullish that they would do something for the economy. But having said that, the inflation is on the higher side. You still have the inventories which are at multi-year highs on LME, while the Shanghai, of course, has seen a bit of a decline. But then yet again, on Bernanke testimony, we did see a bit of a reaction coming in for the space as well, especially for copper, aluminum. How would you want to trade these metals?
Well, like you rightly said, there are mixed signals, but the tone remains bearish, and that is what is also being reflected in the Indian markets as such, because in spite of the rupee being at elevated levels, or the dollar being at elevated levels of about 59.60, we have really not seen any meaningful support for the base metals pack. I think copper has made a strong recovery last week, but not been able to sustain the gains. So I think close to about 416, 418 levels would be a good opportunity to sell into this market. Here we might see levels below 410 as well. In the case of alumina as well, this level of 105, 106 is it's a tricky level, but I think we would like to play on the short side in aluminum as well for a potential target of 103 levels or so.
Well, and nickel really has been the underperformer in all of this sector. We have seen very sharp decline coming in for this one in this month and for the whole year 2013 as well, trading just about that cost of production. 800 is a level that nickel till time really has avoided going below in the recent times. But with the kind of bearishness that we seem to be looking at in this space, do you think that level is not so far away?
I think it is quite possible that we might retest 800 or break 800 as well. Like you rightly said, it has been the laggard of the pack, and in spite of strong gains being posted by the other metals, nickel has not been able to sustain any of that. So it is weak on the charts, it's weak fundamentally as well, and we might retest the levels of 790 or 800 very soon.
Viral, final question before we let you go, and that really is on the rupee, because the kind of movement that we are looking at most of these Indian commodities just comes from the fact of the volatility coming in for the currency as well. What's your own sense coming in for the currency now?
I think yesterday we saw a brief run to about 59 or so on the spot, and there is a strong support at about 58.90 on the spot, which continues to remain as a good level to go long on the dollar. Whereas the upper end of the band continues to remain about 59.50 or 59.80 levels or so. So within this band, it becomes a slightly tricky affair. But I think whatever gains which were made on the back of the policy measures initiated by the Reserve Bank of India and SEBI over the recent times have managed to get the rupee back into that 59 to 60 range as such. Clear direction will emerge only when either of the bands are broken. But for the time being, we would assume that the market will stay within the band till the time it gets some more information on the policy measures as such.